Can't hear me. There you go. You can hear me. Welcome to the closing beat. I just basically said happy Friday, gave you the secret to making money in the stock market. You missed it. Sorry. No, so this is our quick show that we do for everybody here to cover the stock market, really leave opinion out of it. We just kind of cover everything that's happened on the day. I hope you enjoy. If so, maybe you'll hit the subscribe button, but I'm going to dive right into it because I am way behind today. Today is one of those days where I'm just behind. So let's get started here. Basically nothing happened today. The markets finished the week quietly lower, barely lower at all. You can see there on your screen off to your right-hand side there, the Dow basically lost 7 on the day. The S&P, we call that flat. So it didn't gain a point, it didn't lose a point, you just say flat. So if you want to sound cool in front of your trading friends, you just say, man, the S&P was flat today. What's good, man? Volume was about 75% of the average. Whoa, what's going on? So look at that chart down there at the bottom. There's a blue little vertical bar that shows you 1 being average volume and anything under that being less than average. We traded about 75% average volume. Why? Because we have earnings coming up, and so investors don't want to make any major decisions or have already made those decisions ahead of earnings. Now, the way the markets have moved today, we started lower on the day, and then financials led the way. We'll cover that here in just a second for you, but basically I want to show you here the markets are basically forcing those people who sold at these lows here to dive in and start buying. We've reached an emotional stage. Now all week I've not all week, but starting about Wednesday I started saying, hey, this market is maybe just a little bit overbought in the short term, and if you saw the markets fall, you shouldn't panic. It would be no big deal. The problem with that is it hasn't fallen, right? So every day, I'm not saying that because I think I have a crystal ball and can predict the markets. It's how traders respond. So every day that the market started lower and started to rally, what happens there is anyone who sold during this low panicked and thought the world was ending for some reason, they're sort of forced to buy back at higher prices. And that's why you see the markets today, if I could just go back to this chart, that's why you see on the screen there the markets started lower, and every time they started to rally, you got a little speed there, right? You got a little pickup to the upside. When they pulled back, right? People go, oh, great, this is cool. Maybe this is something here. Starts to rally again. You're really forcing people that traded emotionally through the end of the year to hop back in there. Economic news today, CPI, Consumer Price Index, the Consumer Price Index fell for the first time in 9 months. You had low gas prices. So if you're an economist and that's as far as you want to take it, just know that low gas prices affected that. Inflation very much in check, although I would disagree. It seems like things are getting more expensive. The general public tends to disagree with inflation, while the data tends to show nice and consistent, like everything is fine. We're going on to day 21 of the government shutdown. You'll see in the news today that today was the first day that people affected by that shutdown did not get their paychecks, about 800,000 people. They say the pressure is mounting. We have one key factor. I talked about it last night in our Wine and Wealth class for our customers. There's only one thing that will put pressure on both sides to get something done on this government shutdown, and we're nowhere near it just yet. So can you guess what it is? If you guess it, I'll tell you what, I will send you a coffee cup and I will send you a towel that says the markets recover 100% of the time if you can guess. The first person to leave a comment, not here live, but in the comment section, if you guess what that one thing is, not our customers, don't give it away for those that aren't that are customers, don't give it away to everybody else, but let's see who can guess that. Anyways, bond prices rose today, which means yields came back down. If you're following the 10-year at 2.697, that's just a little bit better news if you're trying to do something with a house. So that's that one. The rally this morning started with financials, so I'm going to dive right back into this here. First, let me just cover the S&P 500 if you're interested. Sorry if the audio peaks a little bit. It's because I'm wearing this sweater because it was so cold. The mic is really close, so I apologize for that. The S&P very much stuck right at technical resistance. If you believe in technical analysis, then you know that's why we're stuck here. If you're a fundamental trader, then you go, okay, give me a reason why I should be paying more for this market. I get the discount, right? If you're following PEs on the overall S&P, you understand the discount, but you need more reason to buy. When you put fundamental traders, technical traders together, and they both don't have a reason to buy, well, and you have earnings and a whole slew of government news coming up, and Brexit, then you have a recipe for a market that's just content to finish out the week with no real massive adjustment or position changes. Anyways, we were talking about financials starting this rally today. Financials, if we look, look, I'm going to go down to like a 5-minute chart here for you. If you look here, this is the beginning of the day. Everything started lower. Financials started lower. I know it looks like a big old mess here, but financials started the rally early, which helped pull the markets off of the weakness that we saw from lower prices in oil. So if I go back to the daily chart here, we look at oil, that finally broke its 9-day win streak. I'm jumping all over the place here on my notes, but it finally broke its 9-day win streak, and so that held us back early in the day. The banks kicked in, like we always say, you need the banks and you need tech stocks to pull the markets higher, and so that's really what kind of kicked this thing back towards the highs of the day, where you see on this chart here that the markets started lower and then finished back basically where we started. So not to keep hopping around, but hey, someone had coffee for the first time this week today, so really rolling here. Let's cover a few things real quick. Next week, what's going on next week? Next week's going to be exciting. Wednesday, I told you if you wanted to go to Disney World or take the rest of the week off, you could. You probably wouldn't miss much. Did you miss much? Remember, I'm the guy that will always tell you ahead of time rather than tell you I told you so. I love doing that because, hey, it builds credibility, right? So Thursday, nothing happened. Yeah, well, it was a little rally, right? Friday, today, nothing happened. So that's done. You need to come back from your vacation now. Time to pay attention to the markets because next week we have earnings. We're going to do something different this earnings season. It occurs to me that maybe people want more data. So here we go. Citigroup will be the first to report earnings next week. Here's where Citigroup is, by the way, if you want to look on the chart. Also very much overbought in the short term here. Citigroup beats their earnings estimates 74% of the time. If you're a short-term trader, you just like placing some bets, you like using options, you kind of got to go with those stats. The problem is the average move is only 1/3%. The average move on the day that they report earnings is about 1/3%, so there's not really a lot to do there, but it gives you an idea, hey, will Citigroup beat earnings or not beat earnings? And historically, is it a positive return after that or a negative? Now you know it's positive. The one thing that let me just cover this. JP Morgan, Wells Fargo, they're also going to report their earnings next week. That's going to move the markets, right? So I'm telling you ahead of time, Citigroup, JP Morgan, Wells Fargo, all going to move the markets on their earnings results. Remember that this earnings season is about, we'll call it, this guy that I used to follow, he's awesome, man, here locally. He calls it beat the street by just 1 penny, and that's what this earnings season is going to be all about. Can you beat the lower expectations by just 1 penny? And if so, that could really kind of fuel this next little rally. If not, we start to see a pullback, in my humble opinion there. So one thing that pops up for next week, there's a lot of names reporting earnings. We're getting started next week. United Healthcare, or they call it United Health Group now. They're going to report earnings as well. If you look at all the companies that are reporting earnings next week, you want a fun little stat? Look at all the companies reporting earnings next week. They'll report on Tuesday. Yeah, they'll report on Tuesday. 91% of the time in their entire history, they beat earnings estimates. Now, they could say any number of things, but 91% of the time, if you like to know if a company beats their earnings, these guys can get it done. Now, let me stop for just a second. This is just for fun. We're long-term investors. We are not the buy and sell sort of active traders for our customers. We're long-term investors. All of our portfolios on our website have objectives, just like a mutual fund. We manage those funds that we offer. There's no fee for those funds, by the way. We manage those with that objective in mind. So when you see me kind of pointing out interesting stats, this is all just for fun to keep you engaged. We absolutely do not do this sort of active trading for customers. I think that gets lost in the mix sometimes. We are, think of the funds that we offer just like mutual funds. We would never just invest you in one. We use a mix of them together to achieve your goals. And so I don't want there to be a disconnect that you think I'm like somehow stock picker boy over here. I don't do that, right? So for our customers, volatility and speed, most important things, which you'll see on our website with our portfolios that have their objectives listed there. Okay, enough of that. Just didn't want you guys, because we're going to cover a lot of this over earnings. Just don't want you thinking like somehow we're some stock picking thing going on here. We covered the price of oil already, and it broke its 9-day win streak. For the last 10 days, it's up 15%. well, you could see it on the charts there. 50-day moving average, that's the blue line. Technical traders are going to notice that. They're going to think that they've got the upper hand there. Oh, hey, 50-day moving average, it's acting like resistance. That's going to get pointed out a lot, by the way. When you look at the individual sectors, when you look at individual stocks, we are now back to the 50-day moving average on a lot of them. Now, it doesn't matter what I think about the 50-day moving average. It matters what everyone else thinks, because that's what's going to cause the price of any product to move. And so for now, everybody's looking at that on the price of oil. Home builders, another little tiny positive day, back to a technical resistance area, really strong move. It added about 5.5% this week to give you an idea of how strong home builders were there. I just want to cover some of the sectors. Retail caught my attention today. It basically recovered. Let's just say it did. It recovered everything that it lost yesterday. Much of the work coming yesterday pointed that out to you. And so, not bad there. For the week, it's up about just over 3.5% on the price of, for retail stocks. Now, as I was saying, and that's XRT, by the way, if you want to follow. I know you can't see that, I'm sorry. If you want to follow this, everybody looking at the 50-day moving average, XLY, that's just a fun way to look at consumer discretionary stocks. That's the first to get back above the 50-day moving average. And your communication services sector, although it's a little misleading, but it's also one of the first to get back above the 50-day moving average. Just gives you a hint as to where the strength is. Communication services are up 13% since the low since the low back there. Son of a gun. The consumer discretionary, which is the XLY that I'm using here, that one's about just over 14% higher from this low here. So you can see how sharp and quick that rally has been. Therefore, if you saw a pullback, which I still think you will, then it's not a big deal, right? Nobody's panicking. Nobody's really nervous in that respect. I think everybody would sort of welcome it. And that's all I'll say about that. Okay, individual stock news. If you happen to have these in your portfolio, you got Netflix back above the 200-day moving average. A couple of upgrades here. Raymond James was pushing this stock to their customers all day long. If you're familiar with Raymond James. That's one of those big companies where they'll manage your money, but only if you have a lot of it. See, we'll help you with any amount of money, but that's one of the bigger companies here locally in my hometown. Anyways, Netflix was higher because of Raymond James upgrading the stock. The main focus was UBS. They upgraded the stock. They put a $410 price target on it. Notice that puts it right back to these highs. They don't pick those numbers because they're silly and they're just guessing. 420 is the high. They're essentially hoping the stock gets there before other people sell, and then they can say, "Ha, told you so." Anyways, if you're a technical trader, let me just draw this for you. I hate doing this too much because then it gets people thinking this is what I do. But I like to point it out because it's in my blood. It's what I do. Look, we're right back to the top of the downtrend there. So drawing a real quick, simple line, you can see, hey, why did it stop going higher today? Why wasn't it up 5%, 6%, 7%? Well, there's just resistance there. And the computer algorithms that trade based on technical patterns, the humans that trade all over the world thinking that they're using these technical patterns, that's the reason for it. I don't know, I just like to point that stuff out. Sorry. ATVI back to lows, down 10% on the day. They ended their partnership with Bungie. This came out yesterday. I pointed out that the stock fell. I didn't have the news to give you why. Well, now you know why. They're not going to include any revenues from this Destiny video game that's all online, apparently. It's a first-person shooter game. It looks pretty cool. They're not going to report any earnings, revenue, losses, anything from that brand, from that franchise anymore. So that's going to obviously weigh into their bottom line. People didn't like that. PVH, this is Calvin Klein. Well, to be honest with you, Calvin Klein's the only one I can think of at the moment. PVH is, it's a retail company. And I'm going to look it up real quick because there's other names you'll know. Calvin Klein is the one I remember. Tommy Hilfiger, Izod, True & Company. These are the brands that they own. The main focus today, why the stock was higher, they raised their guidance for the fourth quarter. So they came out ahead of time and said, hey, Wall Street, you lowered the expectation for us. We think we're going to do better than that. It's essentially a glimpse into their earnings. They also said they're going to spend $120 million just this year to sort of revitalize, restructure, revamp their Calvin Klein brand. And one of the ways they're going to do that is quit spending so much money on their flagship store in New York City and get rid of that one. So they're closing the flagship store. If you're a Calvin Klein fan and you live in New York City, you're going to have to go to a mall. So Starbucks, a little bit lower on the day, it recovered most of it. This was a prediction by Goldman Sachs. They said, hey, look, Apple said that their Chinese sales were slowing. Who else is big and growing rapidly in China? Starbucks. So Goldman Sachs said, hey, we think that they're going to report slowing sales when it comes to their earnings as well. I'll point it out. You got PCG down a little bit more today. It recovered actually most of it on the day. Their credit rating lowered to, well, depending on which division of the company you're looking at, their credit rating was lowered to B2 at Moody's. That's essentially saying it's not investment grade. If you happen to look up, this is kind of fun, I don't know, it's fun for me. If you happen to look up the Moody's or S&P credit rating scales, by the time you get to B2 on Moody's scale, it says non-investment grade, or should say non-investment grade, maybe a little red in there somewhere, to let you know that it's essentially halfway to junk. So it's not good for those guys. I know they're trying to work it out. That's a tough story. You don't like to kick someone while they're down, but they just got kicked while they were down. So PCG hovering right around the lows. We've talked about it all week. You just wish you didn't have to talk about that stuff. Tilray up 20%. These guys, they're a cannabis company, right? Everybody knows who these guys are. Look, there's a Peter Thiel has he funds a private equity group. It's called Privateer Funding or something like that. And these guys own most of Tilray. 75% of the shares to be exact, and their lockup period is coming up. And so the question is, oh my gosh, are these guys going to try to sell? They got a 500% gain since they initially invested. Well, today their lockup period came up, and they basically said, it's kind of funny, I wrote it down somewhere. They won't be selling, but they said, we will not be selling the shares at least until the second half of the year. So I'd imagine by the second half of the year, you're going to find out that they've pieced out of some of their position. They're smart. They're not just going to dive out of the stock. Anyways, because of that, the stock was higher, 20% on the day. A couple more and I'll wrap up. I don't know why I have so many today. General Motors higher by 7% on the day. Cadillac is going to be their new electric vehicle focus, and they said that their new revamped, retooled sort of pickup line is going to drive their earnings in 2019. That helped the automakers as well. Weight Watchers, or WW, you're not supposed to call them Weight Watchers anymore, they're just WW. So even the TV commercials say, join WW today and lose all that fat or whatever. JP Morgan basically said, we're going to downgrade you because you've had an awfully weak start to what's supposed to be the first point of the year where people go out and work out and want to lose weight. Seems like everybody doesn't care. They're at least not telling everybody or signing up for these programs. Caesars Entertainment, it's a casino by the way, higher by 9% on the day. Carl Icahn is said to be accumulating a stake that maybe leaked out a little bit ahead of time. So that's that one. Helped the casinos as well on the day. Sorry if that was a little bit long. I just had a lot to offer today. Anyways, if you have questions, I'm happy to answer them. Otherwise, hopefully we helped in some way. Going to work on Studio 2J this week. That's where we're going to be doing the closing beat from now on. It is under construction and looking pretty sweet. Yahoo earnings calendar shows the schedule. Also, if you're interested, financial investor, there's a good one. Takes a little getting used to. The Earnings Whisper. I think they lay it out nicely. Earningswhisperer.com. I think that one's backed by Kramer on CNBC. I'm not exactly sure. But they do a good job of laying out companies reporting before and after earnings if you have to look on a website. So maybe that helps somebody else here as well. Stock picker boy. Yep. You like the geeky stuff. Okay, no problem. More investigation. So an upgrade so for all of the, well, most of the stocks out there, there are analysts whose job is simply to cover a particular sector of the market or an individual stock. And so their job every day is to learn as much as possible about one or two or three particular stocks in a sector. For example, they may learn about retail stocks, Nordstrom, Tiffany, that may be somebody's focus. And so they actually go to the companies, they engage with the CEO, the CFO, everybody there. They have analyst day where they're allowed to ask questions. Then they basically go take all that data and they come back, they go on TV and through their channels and they say, we think the stock is going higher or lower. And so you can actually track all these analysts and see how well they do. So when an analyst upgrades or downgrades a stock, it's essentially them giving their customers, which eventually leaks out to the public, what they think about individual stocks. So I hope that was a decent short answer there. No minimum to invest here at Jazz Wealth, but I prefer if you put at least a little more than $1 in there. That would That would help you. Whoa, okay, a lot of questions there. How do you get a hoodie? We're done. We only got a few of the hoodies there. I promised one hoodie to go out. We'll maybe have to order some other next season there, but they are all officially out, besides the one I'm wearing, which I've put on here for this show like all week, so, you know, time to wash it. Downtrend's coming. Tan's excited. All right. Jose doesn't mind long videos. Good to know. Financial investor, glad to help. Looks like I have done my my job here today. Can you do a one-time checkup on a person's retirement status, provide some guidance? I get that question a lot. There's an issue here because we're not financial planners. While I can help and really get in depth with individual customers, we don't do it as a service. Otherwise, we have to be certified financial planners, and I don't really enjoy that business. I can refer you to somebody that I really like, and I'm hoping to have on the show here very soon, but you would want somebody as like a financial planner to review that. Any one of our customers that also has outside accounts, of course, I always help with that. That's all part of the deal. For that there. The name of the website I was talking about a minute ago was earningswhisper.com. It's free. They basically have data connections to all the earnings reports there. Okay, well, hey, back to work for me. I hope you enjoy your weekends. Have a good time. Stay safe. Don't go too crazy there. We'll be back on Monday to do this whole thing over again, and talk to you then. See you.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new Fin Tips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.